Hi everybody, it's Trap Trader here. It's 5:29 in New York right now, and but I'm in Europe, so it's already 11 o'clock. AM. So I'm looking what market is doing right now, and I'm just kind of thinking how to trade this today. What I've noticed so far, it's every single time when the market was going up, every single time when we were making new high, you could short that into this kind of main liquidity volume, main volume or main liquidity of the day, of the previous day. Same thing here. We pushed into. Sorry, I just need to switch this into RTH. It has to be RTH to look at this properly. So that would have worked here. You just short that, or the other trade is you buy a main liquidity sweep, main volume of the previous day sweep. Same here, main volume was here. I'll just put that here. This is the high. The previous high was here. The volume was there, and there you go. You get the push. Then again, this is your main liquidity from the previous day. We push through day high. You got early longs. This is what I'm talking about. The early longs at the open. You can short that into what? Into low volume node of the main liquidity. And that's it, and that's your trade. And then you can reverse it for long, right? So you got 2 trades a day. And look at that. Again, you had the main, that was a quite massive move. Right? So again, you had your high here, high of the day. You shorted it, basically. You could close into this one as a first liquidity, but the second one, because of the scale of this move, you could have held your second part into this low volume node. This level becomes quite important right now. But okay, let's just continue. Daily high again, and you can short it into what? Into previous day volume, the main volume, and that's the main volume. Look what market did, it just dropped here. So I've been trading this part of this setup, and I noticed that volume is quite important here. The market is always, every single time, trying to grab that volume from the previous day and continue higher. So what will happen now if we start to go down? Because I'm thinking, yesterday we had a drop. What was this? 65, right? from 65 to 80, 83. It's 80 points, right? We are looking at, yes. And I've been taking trades from here because the moment we tap into liquidity, there's always a reaction. That was the liquidity. This is the trap liquidity. Every time we had a reaction, I had a little long here. I closed too early. But look what happened here. We went down to grab that, right? We did not take it completely. We didn't take it completely, but we did take the main. I would say, okay, well then it was. And there will always be this kind of, an aspect of experience, because you can treat this as a low volume node. The main volume was, let's say, here. But I would say the main volume was down there. It doesn't mean it has to go down there, but it can. Now, if we look what's brewing today, so that's the liquidity we have for today. So I'm going to mark that. I'm going to mark that. This is how I see it. That's the level the market could possibly drop on RTH. Then where's the top part of the liquidity? Well, obviously it was here. We had a reaction already from that. And now we have this level. But because market dropped in here, and we already kind of consumed that level because we have been here and we pushed higher. Then I'm thinking that more important level is this one, and that one as well. So you never know which one's going to play. But what we can do at the top of that thing, we can drop the ICT optimum trade entry, which is this. It's a Fibonacci, and that's 70%. That's a 62%, which corresponds with this volume. 70% and above would be that volume here. And we could classify that low. I don't think market is gonna care about that bit up here. So what I'm gonna do today is set up alerts on the chart. Basically, that's gonna alert me which level has been taken. I'll actually do this right now. So where was the alert? Here. Okay, so we're gonna put one alert up there. I think I should be able to move it. Right? Yeah, the problem is ICT. Condition. crossing. Use regular trading hours. No. Actually, yes. So crossing message, yeah. Just crossing. Let's just save that. And I'm gonna show that, right? Why don't see this out? Because of the condition. Let's just put that displacement up, displacement down. Interesting. Right, I'm going to look into it later. But basically, I'm going to put an outlet here into these places, and somewhere here probably, just to notify me the market received, managed to climb back up here, and I will short market when when obviously conditions are right, when there's no news that's pushing market high or something like that. That's why you have to watch the news as well and decide on yourself by yourself whether that is something you want to do. On the other hand, if at the open we drop, because notice where we are right now, if we drop basically down here to grab that liquidity, to grab this liquidity completely, which I think has been taken. If I look at this, which is basically minor little bits here, which was swept by this drop as well before. So yeah, this is how you have to look at that. Look at this. This thing has been actually swept here. So the liquidity is only there. And you can look at this by actually doing that. Look at it from here to there. And you will see where was the main liquidity. Because that bit has been swept already. And you can see where is the main liquidity, and the main liquidity is basically from here. Let's say 81, 82, which corresponds with where market got into yesterday. 81, 82. Yeah, pretty much here. So it does look like we took the liquidity. I'm going to switch into electronic. And and now look how market behaves. It's pushing higher. We pushed through that bit of the main liquidity, but like I said, We've been here already and we pushed up. So again, if you want to calculate your liquidity, you have to take in consideration just that bit. That's the main chunk. And here's the top. So in my opinion, and here's the main liquidity from yesterday. You can tell by the size, right? Volume profile. So if we get up there, and you could get like a spike, you might climb back up here, start just fooling around, and then at the open, boom, spike into that. Obviously, there's always danger that this can push into yesterday's high, and that will be a 100% retracement. But I think for today, the goal for the market will be this, because they have been buying that. As you can see, we're climbing higher, and they're going to be looking to sell that into something, right? Into liquidity. And where do we have liquidity to sell into? Here. Here is the main chunk. I'm going to get that off. Here's the main chunk. Here is it. Here's a little bit of short liquidity. Not enough. Not enough. That was quick spike, drop. Here is where the market was fighting to climb back up. This is 15-minute candle. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1 hour 15 minutes of fighting here in this area. There you go. That's the liquidity they're going to be targeting today, I think, at the open. And I will be shorting that. Why shorting, not going long? Well, there will be a reaction here. If we get that, there will be a reaction. Because it doesn't mean we have to climb back up there. We can just be somewhere here, start falling. This is Asia low. At London low, we can go down there, and who knows, market might decide, you know what, let's just go even and grab that one more time. Which I don't think so, because they already have it. They've been here twice. They already have that. They have that volume. They build it up here. So, in my opinion, we are ready to climb. Okay, have a little pullback, maybe grab Asia low down here, and then continue. We could put an alert here as well for Asia low. Asia sell side. Let's just take that. That's going to be our level. Asia sell side. This is Asia high. That's the Asia high. We swept it with London. We dropped, took that level. London open. We're climbing higher. Yeah, that's interesting. What they're gonna do. I think they're just gonna climb back up there. Probably here. We might get a push higher. We might not get it. But I'm just gonna wait for those levels, and try to catch the trade of the day. So I've been doing this trades of the day recently and posting that. Where was that thing? And posting this on. I don't know if you can see that. Okay, you can't. Okay. But anyway, I've been just posting this on my Twitter account, on my X account. This kind of trades of the day. In my opinion, I will probably focus on them only. Try to catch one good trade every single day, and that's it. Instead of looking at the 15 minutes candle and just buying low, selling high, this kind of things, which works, but so there will be a smaller size, obviously, because I need to make sure that I can withstand the pushes. So imagine I'm shorting that thing here for Asia sell side if we don't take Asia sell side. It's going to be 36, let's say 30, let's say 30, let's say 35, 35 to 600, it's 35 points. It will have been 5 MES contracts. And I've made like almost 1,750 dollars if I catch that move. It'll be a beautiful, beautiful win with very small risk. This is where it just came to my mind that I should look for this kind of trades, and I'm progressing a little bit in my trading, and I can see what market is doing and how market is behaving. It's guys, it's just all about the liquidity. It's all about those volumes, the previous day volume. This is our previous day volume, quite evenly spreaded, but the main chunk is from here to there in this place. I'm just gonna do that so you know. This is your main volume from yesterday. A lot of shorts here. They have stop losses up there. Some of them they have stop losses here. That's why I'm saying we might get a push. This is bias, I think, because of the drop. short term, should think for today, we should think to sell. I want to sell here in this area. So that's the plan. Short this area here. Target depends on the volume we're gonna have in here as well. I mean, you can't really compare electronic trading volume with RTH. It's just way smaller. But if we sell this, the main volume I see is down here. So whoever is buying that will have stop losses here. Probably the first stop will be Asia sell side. Just by looking at this right now, because we might drop here before the open. That will change everything. If we drop before the open into Asia sell side, if we do that, if we drop before the open here or at the open and get back and get accepted in the range, overnight range, I'm going to be a buyer of that for a push into London buy side and then even higher into this liquidity here. But I will close everything here and wait if we can get a push into this 47 level, 47 level, 47. Yeah, that's 40. If we get that, there will be some kind of reaction for sure. And depends on the volume that we will create during the day. I can define the target. It could be, let's say it could be down here, or it could be completely down here. So that's the plan. I will be trading ES, but I will treat this like I trade MES. So my entry will be 5 MES contracts. I can't have MES here. As entry position, and if it goes, if I'm like, okay, I'm entering here, and the thing doesn't want to drop and continue into a high, I'll probably cut it and try one more time here with 10 MES contracts. I don't expect on the Friday push higher, but it can happen. It can happen. Anyway, that's the plan for today, and yeah, this is Drug Trader. We still have 3 hours, 3.5 hours till the open. See you at the open, guys. Bye.